Good afternoon. Welcome to this IG special ECB interest rate decision coverage. In less than 5 minutes, the European Central Bank will release its decision on interest rates. All economists expect a cut. Their only disagreement is on how big it will be. Latest data from Bloomberg showed that 61% see a 10 basis point cut to the deposit rate. The remaining 39% expect a 20 basis point cut this time around. Meanwhile, 68% see a 10 basis point cut to the refinancing rate currently, which is flat, and 32% see 20 basis points knocked off the refinancing rate as it stands at the moment. But outside of this, QE, or quantitative easing, is likely to be the main point of conversation from the meeting we've had, or rather contention, I should say. On the one hand, many economists, including Mario Draghi, think that QE remains the most effective tool to solve the growth and inflation issue that the Eurozone is facing. But the Bundesbank president, Jens Weidmann, along with his French and Dutch counterparts, argue that the current economic situation doesn't warrant QE. Or with me on set to take a look at this and look at some of the trades we're going to set up for you for the next 15 minutes or so as we go into that decision at 1:45 is IG Chief Market Analyst Chris Beecham. Chris, welcome. It's quite an important meeting, this, because clearly there's a lot of issues to look at around this. What are your thoughts in terms of what we're going to see today?
Well, I think we are expecting a cut, of course, from the ECB. The question is how big and how much more will they signal in terms of QE, maybe not just now, but further down the line. Remember, this is Draghi's penultimate meeting before Christine Lagarde takes over in November. So there is the potential for maybe some caution, of course, and Bloomberg reporting earlier in the week that he faced quite a bit of opposition in his quest to try and push the ECB towards more QE. But we do find it an interesting moment, I think, for euro-dollar, poised as it is, potentially turning lower after months of declines. I mean, selling the euro against the dollar has been the trade of the year, or one of the trades of the year, really. And it may be now, obviously could be go either way at this point with the ECB, but if it does signal a much more dovish posture and we go back below 110, then it would suggest, I think, that we've seen another lower high being created here. And we could be pushing back towards the lows of the year thus far. Okay,
let's set up a trade here then, because we're currently, at 110.25. Going into it, it's always very difficult, I know, because there's a lot of volatility around these sort of events, especially one, as I said, in as much contention as it is today. Are you holding any positions going into this?
No, I think we're looking at, if you were going to look at trading this, I think you'd go with selling the rally here. It's only a short one, really, for the last few days. But we can have the potential maybe for some short-term weakness. And on the back of that, I think if you go below 110, of course you've got the meeting and the press conference as well, so the volatility is there. But you could watch to go and try and take advantage of this one. And certainly flipping it over to the hourly chart as well, it's been rolling over nicely the last few days. You've had a lot of pressure up around 110.50. You can see that at the end of last week, beginning of this week, all rallies to that level have really run out of steam, and it's beginning to turn lower as we speak now. So an interesting one there, a moving average on the hourly chart rolling over as well.
Other trades to watch?
Well, let's go with euro sterling, of course, stick with the euro, and of course Brexit thus plays into that quite nicely as well. And this could be the flip side of it, really. Decent rally from May over the last few weeks on the basis of perhaps an increased chance of a no-deal exit for the UK, but it is beginning to stabilise, as you were saying before the show, the 100-day moving average there, that blue line. It could be that we start to see again a push higher. Now, you have to wait for the trigger. I think the problem with so much in trading is that people are right, but they're either too early or the position size is wrong. So we may have to wait for this one, but you can make a case for saying that a higher low is being created here. It's holding above 89 where it did in July as well. So you could make a case for saying that that trend is poised to continue if we do get, perhaps, this would of course require more of a hawkish ECB and less of a focus on a cut in interest rates.
Yeah, I've got 1 minute to go. Very quickly, just want to bring up the German DAX. We've seen this wonderful rally we've seen. In fact, today is one of the first days in a while we've seen a down day going into this decision. And of course, Germany has seen a lot of stress in terms of the economic performance, which is why we got the European Central Bank expected to cut interest rates. Would you keep on buying this market?
Yeah, it sounds spectacularly well, and I think as impressive breakout over a much longer term. And I think you have to be a bit cautious now because it's run on quite a way in the past few weeks. But I think, yes, you stick with the short-term trend. It has been a relentless straight-line move. But at the moment, it's hard to argue with the case that perhaps over the next sort of 3 or 4 months, you'll see it push higher. Short-term, though, the potential for increased volatility, really.
Yeah, OK. All right, back with Chris in just a minute. Let's just stick with the euro-dollar chart and go on to, let's go on to a 1 minute chart just to get an idea as to what's happening going into this this meeting and the decision today. We are expecting a lower interest rate from the European Central Bank on its announcement today. This is the 1 minute chart that we've got, and I think we are down, if we can get the ECB headlines that we're getting there, we're looking now at a lower interest rate decision. I think, am I...
minus 0.5 from minus 0.4 for the deposit rate, so that's as expected. Remember, that's their level.
It's gone down by 10 basis points then.
They said the ECB said they took policy action at the meeting. Interest rate on the deposit facility being increased by 10 basis points, as we said. If you look further beyond those headlines, you get further impression of moves towards QE. I'm just trying to see those now. Maturity of operations by extended from 2 to 3 years, really, but the benchmark rate was left unchanged at 0, and they will relaunch QE as expected.
Okay, I just want to quickly take a look at this while Chris looks at some more of those headlines. This is the euro-dollar minute-by-minute trade. Let's go back in to take a look at how this is disturbing the hourly trade. We look at the hourly trade going in to this decision. You can see, as we were talking about, wild volatility. And in fact, we've seen the highest print for euro-dollar since, what was that, Thursday the 5th of September. So we're talking here 1 week highs on the upside. We've now got a pullback on that. Headlines?
Yes, net purchases will be restarted for QE, monthly pace of 20 billion euros as from the 1st of November, and expects the interest rates to remain at present level or lower levels until it has seen inflation outlook robustly converge to its 2% target. You'll forgive the slight humour there. It's something they've been trying to do for quite some time, and they've not got. So the question is, if you couldn't get that with 1.4 trillion of euros, or however much it was, how much are you going to get it more with an extra 20 billion a month? How much does this really shift the dial?
Just do you have a date for when the QE starts? That's the only other thing.
As of the 1st of November.
Okay, fine. So we do have a little bit of time before that kicks in, but interestingly enough, that comes in before the new chief takes over, Christine Lagarde. You mentioned the positioning of the current guard, if you like, going into this new era for the European Central Bank. I'll be expecting the European Central Bank to take a different view of things. Christine Lagarde is a big picture person. She comes from the French finance ministry. She's had a lot of history politically. This is not a political role, of course, one must remember.
No, but it's becoming increasingly so, of course, because of the lack of action from the European states. I think that's the key thing that she has to pick up on now. Draghi's been doing his best to shepherd the European states, and for that read Germany, in the direction of spending more money, and they refuse to. So Lagarde's point now is to try and be a bit more diplomatic, a bit more congenial, to try and somehow coax them into doing what the ECB can't do, which is kickstart the Eurozone economy through fiscal spending.
Yeah, OK. Let's move on to take a look at the chart for what's happening with this euro against sterling. Same sort of move that we've seen against the US dollar. Let's go back into a 3 minute chart to get an idea at that wild volatility again. But I think broadly speaking, the trend that we've seen, Chris, remains in place. We've got a little bit of a spike today, but would you be selling this market? As you say, we got the price action holding up at the 100-day moving average. Yeah,
you're beginning to push through that now, and I think it probably suggests that this downward move against the pound has a bit further to go, really. So I would still be arguing more you're looking to go longer term than you are trying to short it. But in the very, very short term, I think that the immediate reaction is still weaker because of this big, relatively big move, I think, towards more QE. OK, longer term for euro sterling, if you are going back up, that suggests weaker sterling. Are you suggesting then that's a situation where we're then revisiting a no-deal Brexit? Because that's what people are saying. It's what's really going to drive sterling weaker from where we are here, which is probably going to be the really next big issue to discuss when looking at these foreign exchange markets between the euro and sterling. Yes, exactly. I think we see further downside for the pound, really. It has rallied significantly over the last few weeks. We have got a Fed meeting, of course, next week, which is interesting to watch, but certainly against the euro, I still think that people will still be picking the euro over the pound in this one, and the general upward move we've seen since May is still broadly intact. Yeah, OK. Let's pick up on the German 30 as well, because this is another trade we were looking at. And in fact, as we went into this, we were looking at some little bit of a pullback, but in fact now we've got money going in to the German DAX. This is the 5 minute chart. You can see we're far better off than we were. In fact, this is the highest print we've seen, in fact, in today's cash session on the German market. So this would appear at least to be as a market you would not want to be caught short on. No, and the driving move in European stocks has been the bank stock index jumping 1.7%. The ECB introducing rate tiering there, which means that the banks will have a different deposit rate, then it will be passed on to consumers. So it's in a sense trying to protect the banks from the effect of negative interest rates. And this is the quest for the ECB, is to break that link between lower rates that hurt bank profitability and bank shares. And they've been moving very much in tandem. You've seen how Deutsche Bank has suffered. And that's the thing that the ECB needs to do, really. It's a tough job, of course.
Reading around the subject of today's meeting, in fact, I noticed that I think it was the Dutch pension funds were saying they've got to have some sort of recognition of the fact that they do hold a lot of cash for investors, and they can't be seen to be sending that cash back to the European Central Bank because they're holding so much cash on deposit. And this is the problem about sending these deposit rates down, is that you then incur all sorts of problems for institutions that do, as a result of their normal daily activity, hold cash.
Yeah, precisely, and this is the problem, how you resolve a system where there's all this cash sloshing around, and yet somehow you're going to have to return that to the ECB by the official terms. That's why they're introducing this tiering system. I think it underlines the point we're seeing about this ongoing fall in bond yields, that people are still finding somewhere to put their cash. They're having to move from bonds to equities to keep finding that income. And I think it's a process that will continue. About 2 years ago, we thought this was beginning to change, but it's come back with a vengeance, and it sticks with us now, I think.
Yeah. OK. Let's pull away from the European Central Bank, because now we know what's happening there. The flip side to the euro-dollar trade, of course, is what's happening with the US dollar. And we've seen this is the dollar basket. Next week, I think it's Wednesday. So this time next week, we'll already had the US Central Bank meeting and the decision next Wednesday evening. And President Trump yesterday tweeting that he wants interest rates at 0 or negative for the US. But of course, that realistically is the only way that Trump's going to get a weaker dollar, because when you ever have interest rates higher in one economy than you do another, obviously it makes sense in holding that particular currency. So holding dollars would seem to be a no-brainer against the euro.
Exactly, and the ECB has done no favours for Jerome Powell. I think you can hear the sigh in Washington, because this pushing the euro down, pushing the dollar up, you can see that there. Undoubtedly, the occupant of the White House will be looking at this now and thinking that if only Powell would get with the programme as he sees it in terms of central banks and move, as he said yesterday, towards 0 or negative interest rates for the US, a huge change there, then the dollar would start to fall. I'm not sure that's quite the case, and you can argue that the president can see the consequences of low rates in the eurozone, and you'd wonder why he'd want to go there, but it will be harder for Powell to resist this, and next week's Fed meeting will be very interesting on this point, I think, and you can see how the dollar's strengthening, putting a lot more pressure on those other currencies. Partially those inflows, though, of course, if you've got people buying the dollar to get access to treasuries and US bonds that give you a yield of some kind, getting away from the negative yields in the eurozone.
Yeah. Just want to quickly return to the eurozone, because we haven't discussed the outlook for inflation or GDP. GDP, 0.2%, I think, quarter on quarter. Inflation's 1%. CPI inflation is 1%, a whole percentage point below that target rate of at 2 or around 2%. This is the problem, isn't it, for the eurozone? And I stopped short about calling it a conundrum at the top of the show, but in fact it's an issue where inflation just has not gone up. And now this is the thing that we were warned about 10 years ago when they started QE, that all of a sudden prices would lift off because inflation, this is an inflationary type of monetary policy. But it's done nothing to prices, and it doesn't seem to matter how much money you pump in or how low your interest rates are, prices don't go up.
No, exactly. It's a problem the Bank of Japan is facing, the Fed is facing, that CPI refuses to respond. And I had to argue that maybe this is a cyclical thing. Maybe it's part of the economic cycle. It's part of, in a world we have Amazon and Uber and all this kind of thing, putting downward pressure on prices. That's the tough thing for central banks. Maybe the textbook we had since the crisis of the 1970s about fighting inflation is no longer relevant in this day and age. I hesitate to say this time is different, because it's the most dangerous word in finance, but I think maybe we are a different world. The only way you can see inflation going up substantially, I think, is if you get this big fiscal stimulus from around the globe, from the US, from Germany, from the UK, from Japan, to try and get this money flowing back into the system to restart economic growth. Then you might have the case for saying inflation is returning. But at the moment, as you rightly point out, it is nowhere near where the target they'd like it to be at.
And of course, all the time debts are building. Global debts, we heard the other day, a short while ago, that debts are, the biggest they've ever been. And this is going to be a really big issue.
I think it was 240 trillion or something in global bond issuance. It could be an issue at some point. It could come home to roost. The problem is trying to work out when that comes true. We've been saying this about bonds for a long time now, and yet the great bond bull market continues. Jamie Dimon last year, almost a year ago, was saying prepare for the US 10-year yield to go to 5%, and it's now headed further and further towards naught. So he got it wrong like the rest of us. And I think that's the point of markets, is they will outfox you if you just assume that things will turn around. I think that's the wrong way to go about it. Things are carrying on in a way that we thought they would do, I think, really.
Yeah. Okay, all right, Chris, thanks so much indeed. Let's quickly revisit some of these charts again. And we've got the short position for euro-dollar building up now. If you are short on this, currently at 109.70, your stop would go above this area here, which had previously been a support, now resistance at around about the 111.20 level if you're short at 109.69. Just an update of what's happening on the German markets. I think this is fascinating. And we've been discussing this in the early morning call, well, as long as this has been going on now, since that 26th of August low that we've had there. And this has been a really good bull run for these markets. Let me just quickly update you on what's been happening in terms of the percentage move. It doesn't seem like I'm able to pick that up on a percentage move that we've had, but that is a near 9% move that we've seen since the just the beginning of September on these German markets. And at 12,433, this market moving ahead again. It can see all this money coming back onto the balance sheets of these banks. And as Chris was saying, it's just a question now of waiting to find out just where it all ends up. But broadly speaking, it is good for stocks. And if you're long at 12,442, your stop would go to around about the 12,260 level, which is just below the underside of this line of support. So it certainly seems like it's a negative day for the euro. It's a positive day for stocks, certainly there on the German markets. That's it for this live. The next big report that's due out is 7 p.m. next Wednesday, which is the US Central Bank meeting and interest rate decision. We'll be live. Chris and I'll be here at 6:45 next Wednesday evening with a look at just what we're expecting and how to trade that as well, as we look to doubtless another round of interest rate cuts coming through there from the US Central Bank. And I'll be back as usual tomorrow morning for the early morning call on Friday the 13th of September. Hope you can join me for that tomorrow morning at 7:30.